Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Arif Najmi bin Muhammad Nazri, and I'm from Aliff Bata Co group. So today, I would like to present about my group business proposal report. So, for the company overview, our company name is Aliff Bata Co. The name Aliff Bata is chosen as the commercial name for our furniture store since it was derived from the name of the owner itself, who is Alif Ulaimi. He was the founder who came out with the idea to commence a business that convert a semi-finished product into finished product, which are bookshelves. Our company was established since 1st January 2020 and it is located in Kampung Pulau Rusa, Kuala Terengganu. For any inquiry, people may reach our contact number. Our type of business is manufacturing, which mainly focusing on the production of bookshelf. Our business ownership sole proprietorship, and one of the advantage of this type of ownership is it is the simplest and least expensive way to start a business. Our goal for this business is to capture a bigger market because by doing that, it will widen our opportunity and potentially can create a higher demand. Next, we want to ensure that our products are able to meet society's satisfaction. Therefore, we can achieve a brand loyalty from our customer. Lastly, we also want to increase the efficiency of usage of labor and resources so that the production rates can be increased and become more systematic. So, in order to achieve all the goals, we need to conduct our business based on Syariah Islam so that the business will be conducted in the right manner. And next, we also have to improve our quality consistently to meet the consumer's desires, and we should be able to learn new ideas and learn from our mistakes. For the organization chart, the owner of the business is Mohammad Alif. The Chief Marketing Officer is Muhammad Aiman Syazwan, and the Chief Financial and Operating Officer is me, Muhammad Arif Najmi. Each of us play an important role in running and managing the business. Okay. Firstly, Muhammad Alif, as the owner of the company, he has to create a business plan, monitor the financing activity, hire the staff, review sales, and oversee the daily activities. Next, Muhammad Aiman Syazwan, as the Chief Marketing Officer, he is responsible to develop the best marketing strategy and handling promotion. Lastly, me, Muhammad Arif Najmi, as the Chief Financial and Operation Officer for our company, I am responsible to analyze, forecast, and project our budget for the whole year. So we must work together as a team in order to ensure the company runs smoothly and become more progressive in the future. For product and services, bookshelf is the main product for our company. The designs of usual bookshelves in the current market are not versatile to all kinds of rooms. So, we came out with an idea to produce bookshelves that can be designed using wallpapers. The customers can choose between 3 different colors, which are black, white, or beige. Next, we use real woods instead of compressed wood to make sure our bookshelf is long-lasting and durable. For market analysis, we have set our target market, which is focused more on educational institutions, household, wholesaler, and individuals. Our potential customer will be in the category of household, wholesalers, teachers, and students. This includes the young adults, middle-aged adults, and the elderly. Next, the competitor. There are several businesses that related to our business, which makes them as our competitors. We need to compete with them in terms of marketing and selling so that our products will become the consumer choice. There are many furniture stores in Terengganu such as Lavino Sendirian Berhad and Bilal Prabhu. For the SWOT analysis, our strength is strategic location with a reasonable price, in addition with the touch of innovation culture, which has been the recipe for our company. But we have to improve the marketing and avoid bad sentiment towards our product so that it will not impact our brand. The opportunity that we have is in attracting people from the low and middle class family to buy our products as well as giving an excellent customer services. The trade for our businesses is we need to compete with the existing business and the challenging economic situation. For the marketing strategy, our bookshop is known as an exclusive product since it is designed to be versatile and suitable to all kinds of rooms and houses. Next, we are willing to spend more on promotion to introduce our product so that the consumer will be familiar with our brand. Other than that, customer satisfaction is our priority because it sets our company's reputation. Lastly, by keeping a good relationship with customers, it will maintain and grow our business wider and stronger. Lastly, for operational plan. Firstly, to produce a bookshop, the material that we will use are plywood, wall bracket, and wallpaper. We will buy the material for our product from various suppliers. Then, our labor will assemble and wrap all the components using paper bag. Then it will be packed into biodegradable box. Next, for customer that interested in our product, they can contact us by phone call or come to our shop. The delivery service is also provided for our customer either by our own delivery van or other local courier. Lastly, the customer is given an option whether to pay by cash or online payment to complete the purchase.
For the capital, our company has started with 318,068 ringgit, which include initial capital 225,000 and 93,068 ringgit for machinery, delivery vehicle, and furniture and fixture. Next is classification of production costs. So for direct material, we have wallpaper, plywood, and wall bracket. Wallpaper we need 6 pieces, plywood 10 pieces, and wall bracket 4 items. So which total cost 163 ringgit. For direct labor, each bookshelf we need 3 hours, and 3 hours multiplied by 10 per hour, which costs 30 ringgit per unit. In manufacturing overhead for 500 units, we have screw, utilities, depreciation, machinery, factory rent. Screw total cost is 200 ringgit, then divided by 500 units, we get 40 cent per unit. And utility, total cost 500 ringgit, divided by 500 units, we get 1 ringgit per unit. Depreciation machinery, total cost 13 ringgit 35 cent, divided by 500, we get 3 cent. And factory rent, total cost 600 ringgit, divided by 500 units, we get 1 ringgit 20 cent per unit. So total cost is 1,313 ringgit 35 cent, divided by 500 units, we get 2 ringgit 63 cent per unit. So total cost per unit is 195 ringgit 63 cent per unit. For the period cost, we have wages and salary, which is cost 9,000 ringgit per quarter, shop rent 900 ringgit per quarter, utilities 300 ringgit per quarter, depreciation delivery van 800 ringgit per quarter, depreciation furniture and fixture 100 ringgit per quarter, advertising expenses 2,000 ringgit per quarter, and commission 2 ringgit per unit. Next is variable cost. In direct material, we have plywood 74 ringgit, wallpaper 57 ringgit, bracket 32 ringgit. In direct labor, we have wages and salary, which is 30 ringgit. In variable manufacturing overhead, we have screw and utilities, which is 1 ringgit 50 cent, and sales commission 2 ringgit. And total variable cost per unit is 196 ringgit 40 cent. For fixed costs, in fixed manufacturing overhead, we have depreciation on machinery and factory rent expenses. Depreciation on machinery costs 13 ringgit 35 cent, and factory rent expenses cost 600 ringgit. In fixed selling and administration expenses, we have wages and salary costs 9,000 ringgit, shop rent 900 ringgit, depreciation on furniture and fixture 100 ringgit, depreciation on delivery van 800 ringgit, advertising 2,000 ringgit, utilities 300 ringgit, and all fixed costs is 13,413 ringgit 35 cent. For selling price, we sell our bookshelf 333 ringgit per unit with markup 70%. In CVP analysis, for contribution margin per unit, we get 136 ringgit 60 cent per unit. For break-even quantity and sales, we need 392 units to break-even quantity, and break-even sales, we need to multiply by 333 ringgit and get 130,536 ringgit. In target quantity and sales with targeted net income, we targeted to get 50,000 ringgit net income. So we need to sell 1,544 units. Bookshelf. Master budget. First is sales budget. So we budgeted sales increase by 70% every quarter. For the first quarter, total budgeted sales is 166,500 ringgit, and second quarter, total budgeted sale is 283,050 ringgit, and third quarter 481,185 ringgit, and fourth quarter, total budgeted sale is 818,014 ringgit 50 cent. Next is expected cash collection. So our company policy are 70% sales in cash and 30% credit sales are collected on the following quarter. For the first quarter, we collect 116,550 ringgit, and second quarter 248,085 ringgit, and third quarter 431,744 ringgit 50 cent, and fourth quarter 716,965 ringgit 65 cent. And we will collect account receivable next year 245,440 ringgit 35 cent. So next is production budget. So our company policy is ending inventory is 20% of the following quarter budgeted sales. So for the first quarter, required production is 670, and second quarter 1,019, and third quarter 1,792, and fourth quarter is 2,800, and the total is 6,086. Next is direct material budget. Our company policy is ending inventory is 20% of the following total direct material required. For the first quarter, total direct material to be purchased is 142,429 ringgit 40 cent. The second quarter, 191,306 ringgit 58 cent, and third quarter, 325,009 ringgit 29 cent, and fourth quarter, 398,979 ringgit 66 cent. And total cost for the year is 1,057,724 ringgit 93 cent. So next is expected cash disbursement. Our company policy 50% will be paid in quarter of sale, and 50% will be paid in following quarter. So the first quarter we will pay 71,214 ringgit 70 cent, and for second quarter we will pay 166,867 ringgit 99 cent. For the third quarter we will pay 258,157 ringgit 93 cent, and the fourth quarter we will pay 361,994 ringgit 48 cent.
Let's proceed with direct labor budget. First, our total required production is 6,281 ringgit and 71 cent, times with direct labor required per unit 3 ringgit. So our required is 18,845 ringgit and 30 cent. Then our hourly wage rate is 10 ringgit per hour. So our labor hour required times our hourly wage rate 10 ringgit. So our total direct labor cost is 188,451 ringgit and 30 cent. Manufacturing overhead budget. Total budgeted direct labor hours 188,451.30 hours times with variable manufacturing overhead rate is 2 ringgit. So total variable manufacturing overhead cost is 376,902 ringgit and 60 cent. Plus with our fixed manufacturing overhead cost, which is total to 7,360 ringgit and 20 cent. So our total manufacturing overhead cost is 384,262 ringgit and 80 cent. Less with our non-cash expense, which is total to 160 ringgit and 20 cent. So our total cash disbursement for manufacturing overhead is 384,102 ringgit and 60 cent. Ending finished goods budget. So our product production cost per unit. Direct material is wallpaper, cost to 57 ringgit. Plywood cost to 74 ringgit. And wall bracket cost to 32 ringgit. Plus our direct labor 30 ringgit. And manufacturing overhead cost 6 ringgit and 12 cent. So our total unit product cost is 199 ringgit and 12 cent. So our budgeted finished goods inventory is ending inventory units 835.21 times with our unit product cost 199 ringgit and 12 cent. So our ending finished goods inventory is 166,304 ringgit and 65 cent. Selling and administration budget. Our budgeted sale total to 5,251 ringgit 50 cent. Our variable selling and administration per unit is 2 ringgit. Come from sales commission 2 ringgit. So total variable expense is 10,503 ringgit. Then plus with our fixed selling and administration expenses, there is total to 153,600. 38,500 for one quarter we got because our total fixed for per month is 12,800. So times 3 we got 38,400. So total selling and administration expense is 164,103 ringgit. Then we left with non-cash expenses, which is 2,700 per quarter. Total to 10,800. Non-cash expenses is come from our depreciation for furnitures and fixtures and delivery van. So our total cash selling and administration expenses is 153,303 ringgit. Cash budget. Our policy is that beginning cash balance should be at least 40,000 ringgit. Interest rate is 12% per annum. So our total cash available come from beginning cash balance at which capital contribution and cash collection. So total to 1,728,345 ringgit and 50 cent. So less with cash disbursement from direct material, direct labor, manufacturing overhead, and selling and administrative. So our total disbursement is 1,584,092 ringgit. Then total cash available less total disbursement, so our ending cash balance is 144,253 ringgit and 50 cent. Proceed with our income statement. Aliff Bata Co budgeted income statement for the year ended 31 December 2020. So our total revenue is 1,748,749 ringgit and 50 cent. Less with our cost of goods sold, which is 1,430,167 ringgit and 98 cent. So our gross margin is 318,581 ringgit and 52 cent. Then less with our total expenses, which is only operating expense from selling and administrative, which is 153,303 ringgit. So our net income is 165,278 ringgit and 52 cent. Then for our last presentation, which is balance sheet. Aliff Bata Co budgeted balance sheet as at 31 December 2020. So our total non-current assets is 93,068 ringgit, come from delivery van, furniture and fixture and machinery. Then our total current assets is 589,768 ringgit and 35 cent, which has come from account receivable, cash and the inventory finished good, and direct materials inventory. So it owes value to get working capital. That is 682,836 ringgit and 35 cent. Then we look for our equities and liability. Our equities only consists of capital and net income, which is total to 483,346 ringgit and 52 cent. Then our liability is only account payable, which is 199,489 ringgit and 83 cents. So we got our total equities and liabilities is 682,836 ringgit and 35 cents. So our balance sheet is balanced as our total assets equal to total equities and liabilities. So that's all from us. Thank you.